Good evening. This is the Elliott Wave update for the NASDAQ 100 for Tuesday, February the 1st, 2022. And what a difference a day makes. The rally continued today. In fact, it wasn't so strong until the very end of the day. And of course, Google reported earnings today. Google is a superior company and didn't necessarily blow the doors off, but they came in higher than expectations. And the stock gained 200 plus points from where it closed regular session. Stock closed at 2,752, almost 53. Stock's now trading at 2,992. They also announced a 20-for-1 reverse split. So lots going on with Google. They did announce a split. That's a very bullish type of move. I don't know the exact date, but I'm sure that's contributing to the advance. Now, how does that translate to what's going on here in the NASDAQ? Well, in the NASDAQ, I had alluded to and stated yesterday that this 4 that I was continuing to count part of this rally as the possible completion point. It has now come within a stone's throw of 15,152, and I'm calling 153. It's gotten as high as 15,137. It's within a stone's throw of breaking that. That tells me it can't be a 4. So what I've done now is I continue to count this C wave, but there was the minute 3, minute 4, the minute 5 ended on the 28th, so last week, at 13,831. And the 5th wave of C ended in a failure. And to tell you the truth, I don't really see any other count that is plausible to work here. The only other count that could work would suggest that this is a first wave. And it just, I cannot count it out as a first wave. So that keeps the intermediate 3rd wave here, the intermediate 4th wave here, instead of the 3 being there and the 4 coming in down here, and this being the 5 and the completion point for all of our advancing sequences. Because if that were the case, this would have to be wave 1, and it just is not 5 waves. This would be wave 2, which it could because it's a 3 wave. This would then be part of or all of the first 5 waves down. And maybe that 5 would also end in a failure. But that again, I would not expect that. I would not count it that way. So I've kind of rolled it around to see what else could be possible. And I'm not coming up with anything that's acceptable under Elliott guidelines and rules. So that leaves me with that this ended the C and then the intermediate 4th wave. And what we're now launching higher in is an intermediate 5th wave advance. Now that will be completing, and after the intermediate 5, it's completing a primary 5, it's completing a cycle 5, and it's completing a super cycle wave 3. Now, that differs from the S&P. That differs from likely the Dow. And it doesn't matter because we already know that while the S&P went up to new highs, the NASDAQ did not. Got sort of close, but no banana, did not make it. So therefore, it now can go up and make its new high, and the S&P will not. It's in a different count. And so I'm going to stick to what I'm seeing in front of me and suggest that we are now moving up in an intermediate 5th wave. What's inside that intermediate 5th wave is going to be 5 waves of minor degree, which within that first 5 up, we're still within minor wave 1. So at best, I would think that minor wave one is finding some support resistance here at 15,148. Minimal. Not really. I don't think it's going to stand too much in the way. I think it will get broken slightly, and that may finish the first 5 up, and then we'll pull back. But as best I can tell right now, it appears that we might have just got 1, 2, and then we're in the minute 3 of minor wave 1. So minor 1 could get us up pretty high. Now, ultimately, intermediate wave 5 should take out that high at 16,767. So anything above 16,768, new highs. That's all wave 5 has to do. So what can we project in terms of where we think this 5th wave could end up? Well, the 50% retracement, wave 5 versus wave 3, is at 16,761. Not quite where I need it to be. All right. I still need it to get above. So what's up next above that? Well, of course, anything above that can finish it. But on a Fibonacci basis, 618, wave 5 equals 0.618 of wave 3. Very common. In fact, can be the most common Fibonacci relationship between the 5th wave and the 3rd wave. And that comes at 17,482. Can the NASDAQ get there? Yeah. NASDAQ can get to 16,900, 17,000. Why wouldn't it? We still have Amazon and Facebook and PayPal and NVIDIA and Intuit. We still have quite a bit coming out. Let me just see when this guy's going. Yeah, we have Intuit on the 24th of February. We still have plenty to work with. So we're going to start counting it. Now, what can I expect for tomorrow? What can we expect for tomorrow? I believe that I'm going to go back down to my hourly chart. So we can see, as I've said so many times before, when we break that 200, which we did yesterday, and when the 50, because remember yesterday, the 50 wasn't there. The 50 was not above it. It crossed over in Globex. I said, when it does, we're in alignment. There's the 200, there's the 50, there's the 20, there's the 8, there's the 4. The hourly chart is in alignment to go up. I cannot ignore that. Pullbacks notwithstanding, the market will continue to rally. Now, how can I count this? 1, 2, 3, 4, 5. Minute 1, 5, minute 1, minute 2, 1, 2, 3, 4, 5, minute 3, minute 4, 1, 2, 3, 4, 5, minute 5, minor 1. So what can we expect if this little count is the correct? I'm counting all of the little internal moves. What could that tell us? All right, let's just take a peek. I'm looking for wave 5, and my comparison on a Fibonacci basis is going to be to wave 3. If this is the bottom of wave 2, no, excuse me, boom, 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 boom. This is the bottom of wave 2. I'm going to take it from there. Oh, get this done. 2 to the top of 3 to the bottom of 4. Yeah. So let's see where we can start to get over that. Well, 5th wave here again, 618, 15,290. Then we get a pullback. Yeah, that works. Also 15,183. So we have our levels. And I would think that the potential for it to get to 15,637, sure. that would make that wave 345 equal to 3. Yeah, that could work. So we have our zones. We have our zones. But what we can look for tomorrow in terms of upside. Now, if all hell breaks loose to the downside, something strange happens, then again, we're ending in a failure and this thing's going to dive. I am not expecting that. Bullishness has returned to the market. They are now looking forward to Amazon's earnings on Thursday. They're looking forward to Facebook's earnings tomorrow. They're looking forward to, we have other groups coming in as well. AMD reported today. AMD's up 12 off of its close. So they're coming back in and it's looking good. AMAT, we don't get to the end of February. Again, Amazon on Thursday. We have Chipotle, that's not in the NASDAQ. Facebook tomorrow. Google was today, into the middle of the month. NVIDIA is the middle of the month. PayPal also reported today. They beat and the stock's down. So that's the negative that's going to pull on the index. PayPal does not have that heavy of a weighting, but it's still, stock's down 30 versus Google being up to 200 plus. Google has the heavier weighting, but this is 30 versus 200. It's going to pull it down, and we're seeing that. So if Facebook comes in, Facebook is already up 9 from its closing price and is yet to report. So we've got some stuff going on. I'm looking for the completion of the first wave. Then I'm going to look for a pullback, and then I'm going to look for a third wave. Ultimately, the market should continue higher until it makes new highs. Any failure in between, yes, it's possible. If this thing comes all the way flying back down now, I will again have to revise because it can't not be a fourth wave. It's too big. It doesn't. Remember, under Elliott, one of the major guidelines that he offered to the students of Elliott was that when you're looking at a chart, the wave has to look and feel right. And if I'm looking for a fourth wave, yes, this whole move is huge, but a fourth wave is correcting the third wave, right? It can do it, but it can't cross over wave 1. That's the rule. It's a hard and fast, do not break that rule. So while yes, if we go from this level and we dive lower, then maybe I'm going to have no choice but to put the 4 there and then look for that 5th wave down. But at the end of the day, I'm still looking for intermediate 4th wave to complete and an intermediate 5th wave up. So I'm not going to put the 4 there unless the market absolutely shows me and tells me, yeah, that's the 4. And here we go downside, because it can't just drop a little bit. It has to drop all the way and break below 13,706. Right now, it is, you can do the math. That's 1,000 points to 14,007. It's at 15.1. That's an additional 4. 1,400 points higher. This would have to drop 1,400 points plus. Can it do it? Yeah, it can. Since we already saw that third wave kick in and clock itself in at a pretty big number. So it could, but I'm not expecting it. I think we'll see it break above 15,152, and then it'll go up and finish this wave 1, might get all the way up to that 200, and then slide back down, and then correct in 3. That's the next key. We go up in 5, we correct in 3, and then we go back up in 5. That tells us, number 1, that the trend has resumed. The trend being up has resumed. And once that's in place, then you can count it out, and you're going to be looking for new highs. So downside, I think, will be very limited. We've already seen that PayPal is not having such a severe effect on this index. It has pulled back from that number of the 37, a whopping $11. So I think that the basics of the market will outweigh what's happening in PayPal and continue to drive the market higher. This is where I'm going to leave it. Let's continue to trade smart. Today was not always the easiest trading day, but the moves were strong and they remained strong to the upside. We had a few good downside moves. One was at pretty much at the opening, but then it was like head fake, boom. And then actually, let me take this down to the hourly because it'll be much clearer. We did see a little bit of downside on the opening, brought us down, but by 10 o'clock, we picked up and rallying. We put a huge bottoming tail, big bottoming tail. And then we just kind of continued to rally. A little bit of a decline, market figured itself out, and then on the close, we rallied back up. And then after, just pushed. That was on the earnings. Okay, continue to trade using the moving averages. We played with the 20 pretty much all day. We broke below, we broke back above, we broke above, we broke below, we broke back above. So it played against the 20. The 50 ended up crossing back above that 200, and I suggested when it does that, we're going to see the continuation to the upside. We're going to see pushes stronger to the upside. That's exactly what we got. These were not all that strong. They were nice, they were tradable, but each one produced a bottoming tail. So trade smart, trade according to the price action, trade according to your moving averages, and have a great trading day tomorrow. And the next update will be on Wednesday, February 2nd.